Livestock moved lower while corn fought to stay on the plus side. Acta's Michelle Rook is back with more in Markets Now.
Grains closing mixed on Monday with the livestock lower. Brian Grady is back with analysis. And Brian, let's talk about the soybean market, which did see a setback. So was that the NOPA crush report, or was rain in South America part of the problem?
Well, I think the initial pressure came with the South American crop estimates getting bigger and the recent rains there. And most of those areas are in really good condition at the moment and record productions forecast. And so that put pressure on the market, along with heavy selling in soy oil. And then we got the NOPA crush number, and it came in lower than expected. Even though it was a record for November, it missed the target on what analysts had on it, and that put additional pressure on soybeans.
Yeah. Corn went the opposite direction. Were the funds back in buying?
Yeah, so the funds have favored corn and not soybeans, and fundamentally USDA helped out there by cutting ending stocks 200 million bushels. So the fundamentals for corn are much better, and as a result, we are seeing money flow into the long side of the corn market. Definitely not the case with soybeans right now.
No, so there's some corn soybeans spreading, but will the funds be able to continue to push the long side of the market to finally get through some of these chart resistance areas?
Well, I think that's going to be key. Either corn's going to continue higher and pull soybeans off their lows, or soybeans are going to make new lows and pull corn market down. And so as we get into the end of the year, trade gets kind of wonky sometimes with year-end stuff and thinner volume and those types of things. But I think as we get into early 2025, that's going to be the critical one in terms of money flow, which wins out, corn on the long side or soybeans on the short side.
And cattle ended lower. Was that profit taking?
I think it was. We've seen the cash market strengthen for 4 straight weeks. That initially pushed us to the upside, and then we ran out of buyer interest. And once it turned lower, we saw some fund liquidation. So I think technically based, definitely. And we had a bearish reversal on the day, so that's going to be critical. If we see active follow through to the downside, to get more liquidation pressure and pull the market even lower.
Thanks so much, Brian Grady with Pro Farmer. We'll have more Ag Day coming up.